Well, it's a new week, but we still have the same old problems. Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club with your midday market update for Monday, the 16th of July. As we start the new trading week, we still have a myriad of problems that haven't gone away. This morning, Citi Bank announced their earnings for the second quarter. Earnings exceeded expectations, but revenues fell short. Technically, the banks are locked in a broad trading range, and we'll be covering all the banks, the major banks, today in today's broadcast. We are now at the upper levels of that range, so let's see how that works out. Disappointing retail sales this morning underscore the still fragile psyche of the American consumer. Consumers continue to struggle with the uncertainty of the upcoming elections. At the same time, the world economy continues to muddle through the fiscal austerity that is going on in Europe. And those markets are still really in bad shape. So let's get started right away. We've got a lot of markets to cover. We'll be looking at, of course, the S&P 500. And just looking at the S&P 500, pretty quickly you can tell, if you just look at the chart, this is a 3-month chart rather. And you can see basically since this time period right here, and this is about the early part of May, around May 7th, we really haven't gone anywhere. It's just sort of like we've gone in this sort of like very broad trading range with resistance coming in right around this sort of 1370 level, 1380 level, and support coming in right around, let's say, well, at its extreme 1270. So there we have this sort of 100-point range in the S&P, and right now we're sort of like locked in this mode here. And what I'm looking at and what I think is going to happen is two things. One, we are still in our long-term negative trend. We have a daily, which is not so important, but momentum-wise and psychologically it is a negative, but it's still plus 55, which is a trading range. I think what's going to happen, I think we're going to do this. We're going to go up, 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 and then down. I think this is going to be a very key level, just looking at these levels right here. If we go below, I would say probably the first clue is going to be the 1320 level, which is right here. So that's 1320. If we go below that, it's going to be a negative. If we go below the 1310 level, that will also be a big negative. And of course, the psychological level is going to be the 1300 level, which is right here. So let's see how that plays out. But generally speaking, there's still a lot of uncertainty left. There's still the elections, which are going to get ugly. They're already ugly right now, and it's not going to get pretty at all. So let's see how that works out. But certainly, there's been nothing to cheer about from the consumer sector. So let's clear the screen, go to our next market. And the next market we're going to be looking at is going to be crude oil. Now, crude oil is actually acting pretty well. However, it is still not out of the basically longer-term negative trend. Now, intermediate-term trends have turned up from 86.91. We're currently trading at 87.63, so that's positive. But it was still negative from 97.37. So what does all that mean? Well, it really gives you a sort of mixed trend. And if you look at crude oil for the last, well, certainly the last 2 or 3 weeks, you can see we sort of been bound by this level right here and support at 84. So 84 support, and it looks like a resistance around 88 to 89. I think that's a fair assumption. I think until it comes out of those levels, you could see this go on quite a while in the future. So nothing to get too excited about in that market. So let's just go on. Got a lot of markets, as I said, a lot of markets to cover today. So let's go on to our next market. And I'm going to skip the Dow because there's a lot of stocks we want to cover. Let's take a look at the euro. The euro is actually, believe it or not, higher for the day. That was under pressure. That traded down to as low as 21.74, which matched the lows we saw earlier about midweek last week, 21.66 and 21.64. So that's 21.64.66 is a support level. We bounced back up, but we still haven't gotten out of the problem here. And if you look down further, and you can see where the overbought condition, we were very oversold, which we've corrected, and I think we could go sideways and then see another leg down. We're still looking in this market, we're still looking for a move to the two, here we go, we're still looking for a move to the 217 level, to the 220 level. So that's what we're looking for in the euro. And right now we're sort of just going like this. We may see a pop back up to 124, but I don't think we're going to see anything dramatic in this market anytime soon. The problems in Europe are just going to get worse. I mean, Greek austerity, nobody wants to do it. So what do you do in a situation like that? Does Greece leave the euro? Yes, they will. They'll go back to the drachma, and it's not going to turn out well, that's for sure. So let's go to our next market, and the next market is going to be the Nasdaq. We looked at this earlier, but basically you can see that really isn't acting so well. Certainly, I would say a close below this day right here. The low there was, the opening was 2,874. So if we close below that, I think that would be a pretty negative sign for the Nasdaq. It just can't get anything going. Of course, it's overwhelmed by, I think, some of the tech sector right now. So let's go to our next market. That's going to be spot gold. And look at spot gold. If you just look at the charts, everything is negative, minus 70. But what you just go back just a little while ago, and I'll just get a different color on my pen here so you can see. If we go back, let's say, to this level here, which is really kind of like the beginning, whoops, it's really kind of like the beginning of the May period, mid-May or the beginning of May right here. And you can see, really, you just draw a line here, and it's just sort of gone over, under, over, under, and now we're sort of midpoint. So it looks to me like a broad trading range between 1640 on the upside and 1540 on the downside. 100 point range, and I think that's where we are right now in this market. So I think right now I can't get too excited with our monthly, weekly, and daily all pointing down. Even though the market sort of stretched out a little bit, it still looks to me like we'll see this market sort of eventually turn back down and perhaps test these levels on the downside. Maybe we're building a base here, but it's way too early to tell if it's a place to get long anytime soon. So let's clear the screen and go to our next market. And as I said, we're going to be covering all the stocks today. But before I do that, well, let's just continue here and look at our next market, and that's going to be copper. Copper basically is a market that has just sort of done the same. All the metals are pretty much the same. They've just sort of gone sideways since about the middle of May, and you can just simply visually see this monthly down, weekly up, intermediate term trend up, longer term trend down, mixed bag, plus 60 is a trading range, so that's all you have to remember, trading range right now. And I think probably the 355 is going to be resistance, 348 is where we are now, and probably 340 is support. So not much going on there in the copper market. So let's go to our next market. Next market is going to be silver, and silver is like a big yawn here. Look at how these tight days, the last 3 days. This is actually yesterday, the 15th, Sunday they traded. Obviously, this is a spot market, trades 6 days a week. This is Sunday night, and it also shows you just how tight this market is around the 27, 20, 30 area. So not too much to get excited about, but except the only thing you can take away when a situation is like this is look at the long-term trends. Look at the long-term trends, monthly, weekly, daily, all negative. Obviously, daily short-term, but again, the monthly is negative, the weekly is negative. I can't imagine what's going to push this market up. I mean, we've got a banking disaster. We've got Europe as a disaster. Why the market isn't going up, it doesn't matter. They don't pay you anymore for trying to figure that out. So let's go to our next market and see what that is. And that's going to be looking at the Reuters Jefferies CRB index. Then we're going to start looking at the bank stocks, and I really want to pay close attention to that. So here we are, the Reuters Jefferies reflects raw commodity prices, about a basket of about 16, 17 commodities. Crude oil's in there, of course, and the wheat, corn, cattle, and so forth. Generally speaking, the market's coming up to test the previous highs. The previous highs in this market were the 94.82, 294.82, and we're currently trading at 94.65. So right up there. I think we're probably getting towards the upper part of that range. And the reason I say that is a couple of things. One is our Fibonacci, which we've talked about quite extensively in our previous blogs, but you can see basically there it is. And you're right in that zone, that 61.8% zone. So if anything, I would expect to see some sort of reversal from this level. So let's go on. Look at the bank stocks. JP Morgan Chase. If you remember, they came out with their announcement on Friday. and their loss was still a big loss. They did report a profit, but you know, nothing to get too excited about. I think that's the key thing here. And let me just get this. Let me just see where we stand here. Okay, so let me go back to a 3-month chart so you can get this clearly in your view. And let me just pull this out just a little more. So hold on just 1 second. Let's get this right because I want to show you. So we're going to refresh the page, and we're going to go right to JP Morgan. So here it is, JP Morgan Chase, down $1.17. If you remember, it was up about 6% on Friday, and it's under pressure. So here we are. We're looking at this market. If this market closes down here, the low, the best you could have bought JP Morgan on Friday, the very best was 34.86. We've been down to as low as 34.89. So the best you could bought was 34.86, and we've been down as low as 34.89. If we close down here, I think it's extremely negative for this market. Again, we've talked about this market being at the top of its cycle, at the top of its trading range. I still believe that. If we scope this out just a little bit further, you can see this pattern is not a particularly bullish pattern, particularly if we take out these lows right here. It's 33.73, which is not that far away given this market. So we're about $1.50 away from there. If we go below that level, and I expect we will, we're going to test this 31 level, and I think it's going to be a lot of pressure. A lot of people want to get bullish on the banks opposite. There's no reason right now to be trying to pick a bottom. You've got a -85, a strong downtrend at JP Morgan. Why pick a bottom? There's no odds in that. So let's see. We'll get bullish when the market turns, and it may turn from a much lower level than most people expect. So let's scope this out. Just take a look at 5 years. You can see this market is really kind of, let me take some of these signals off. This level here, this low level back here around the 29 level is going to be in a key area. But let's just see how this plays out. But again, it's been going sideways since, I would say, probably about June, July of 09. So let's go to our next market. And the next market is going to be Citigroup. Now, Citigroup isn't in much better shape, and you can see, boom, terrible, 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 from 550 down to, I mean, pennies now. I mean, let's just call it what it is. It's becoming almost a junk stock. So here we are, open up higher, announced earnings, beat expectations. I think they were looking for 86 cents, 89 cents. It came out $1. Expectations for sales revenues were down, which is not a good sign in my book, because they just managed. I think they're firing people, squeezing people out, so they're trying to get everything to get a profit. So profits can be manipulated somehow, but not so much revenues. So let's see how this plays out. But generally speaking, I would say if we close lower for the day, the last Friday's close is 26.67. We're currently trading at 26.82, somewhere around 26.70. So if we close lower for the day, lower than we closed last Friday, I would think that would be a big negative for this market, particularly when they came out with earnings. So let's go to our next market. Next market is going to be Bank of America. Again, this does not look good. We closed Friday at 782. And we're currently trading at 778. So we're down for the week so far. I know it's early, but the reality is that's what we're looking at. And the same pattern here, if we go a little closer, I'll show you the pattern I'm looking at. And it looks to me on all the bank stocks. And the pattern is this. You sort of have this. And here we have a double top right here, of course. And we have this double bottom. Now, if we go below, I would say probably 740 on the downside, I think we'll see this market under a lot of pressure after that. I still think these banks are not out of the woods by a long shot, and I think they could have still have a big move down. So let's be a little bit cautious with this. But again, this market is, let's just clear this off. But if you look at this, I'm sure if I draw in the Fibonacci line right here, from the highs to the lows, and let's scope it out so everyone can see this. So we hit it today, 61.8%, right on the money, and I think that's the the key thing right here. So let's just, yep. So just about the highs, that's where it nailed it on the Fibonacci, and it's you can see the trend is down. Our monthly trade triangles are still negative, and the weekly is negative too. So we expect this market to be under pressure for the rest of the week. So let's go to our next market, and that's going to be Wells Fargo. Now, Wells Fargo is a different market. I mean, if anybody, they have a better model, but the reality is Wells Fargo has really probably topped out for the moment. It will not be able to go it alone, in my opinion, but it has major resistance at 34.50. We got today as high as 34.35 before backing down. So again, I think these markets are, in my estimation, a little bit toppy. So let's see how that plays out. But I'll be back tomorrow. Adam Hewison for Market Club. Have a great day trading, and be sure to check those trade triangles. They really do work. So I'll see you tomorrow, same time, same place. Have a great trading day.